Oil prices were little changed in Asian trading on Friday, holding on to gains made earlier in the week as geopolitical tensions helped underpin the market, even as thin holiday liquidity limited fresh price moves. As of 0:02 Eastern Time, 5:02 Greenwich Mean Time, Brent oil futures expiring in February edged up 0.1% to $62.30 per barrel, while crude oil WTI futures also gained 0.1% to $58.42 per barrel. Both contracts were set to rise nearly 3% this week, although oversupply worries throughout the year have kept oil on track for large annual losses. Oil prices supported by geopolitical risks. Crude benchmark steadied after rising in recent sessions on heightened U.S. pressure on Venezuelan oil shipments. The White House has ordered U.S. forces to enforce a 2-month quarantine on Venezuelan oil, a move aimed at tightening restrictions on exports from the OPEC producer. The measure raised concerns about potential supply disruptions, as Venezuela has been gradually increasing shipments in recent months, particularly to Asia, helping to add a risk premium to prices. Adding to supply concerns, President Donald Trump said in a social media post that U.S. forces had carried out airstrikes against Islamic State militants in northwest Nigeria. The strikes heightened broader geopolitical risk perceptions tied to the oil producer, reinforcing safe haven buying across energy markets. Oil set for yearly losses. Oil prices have struggled to sustain strong rallies this year despite intermittent geopolitical flare-ups, reflecting concerns over demand growth and rising production outside OPEC. Brent oil was set to lose nearly 16% this year, while WTI oil was on track for a nearly 19% decline. With U.S. inventory data delayed by the Christmas holiday and many global markets operating with reduced hours, oil prices remained range-bound on Friday. Attention is expected to turn to early January data releases and policy signals for clearer direction on demand and supply heading into the new year.